Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, June the 5th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning, we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses. We do not know what the market's going to do. Therefore, we create multiple plans or scenarios or hypos, whatever you want to call them. Wait for the market to open up, and then we exercise the plan that best suits the market. Usually I have a hypo 1 and a hypo 2, which are our regular main hypos, and then we have hypo 3 and hypo 4, which are our expansion or trending type scenarios. This is a subscription service. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. We do everything here live in the go-to and the pre-market session, and then we do live trading and analysis during the course of the regular trading hours. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday, our main hypothesis, and if you want, for those that are visiting, you can go onto my YouTube channel. Please, if you're going to watch the video, like it. But there's over, I don't know, there's probably 5 years of videos up there right now. But our main hypothesis yesterday was an open auction just out of range, a move down into the 33 area, possibly a trip to the other side of the value. We were looking for buyers to step in, and we were targeting that 49 and a quarter, the mid of the gap, with a possible late day probe up into the 55, 57 area, and then closing somewhere in the 40s. We didn't get the move down. Hypo 2 was an open auction, a push up into the 49, and then find sellers and rotate ourselves back down into the prior day range, Friday's range. So that didn't happen. Hypo 3 was a gap and go, and a failure to close the gap, a push up into the 49, and then a move up into the 57 and continuation. We've been getting a lot of these combination type scenarios, and I wanted to point out that I've got to tighten my hypos up a bit. I'm recognizing that as the volatility is decreasing, the range, the average true range, the 20 period full session average true range has gone from above 50 now to as of today 2650. So we've got to, and sometimes we're slow to compress and rein things in and get into the summer mode. For example, yesterday, we did get a hypo 3, but we just didn't get any continuation, and we only got a 9.5 point range. And so far in the Globex, we only have 9 3/4 range. Well, that's about half of what we've been getting as of late, and just got to recognize when that's happening and then tighten things up. But for the most part, hypo 1 with a hypo 3 combination, and we basically balanced out here. And again, this is tough to trade because you just get into the sideways nothingness. We were looking for the continuation up into that zipper measured move. That zipper measured move, by the way, was never invalidated. It had to break below the 39.75. So that 54.50 zipper measured move is still valid. They are not session dependent. And then we have a new zipper measured move that's set up in the Globex session, in the European session, this one right here. So there's the impulse, 7 points. There's the zipper, the 3 wrinkle bars, and the extension out of that is to 53 1/4. So we have a target at 53 1/4 on one zipper measured move, and from yesterday's zipper measured move, 54.50. So we've got confluence up in this 54 area. Excuse me, I'm going to lose my voice. And this one will remain intact until we get below 42. So basically below the key line in the sand, or the over-under line that we're using at that 41.75. But let me just back up and get some business out of the way. Taking a look at the news, we've got Red Book in 4 minutes. We've got 54 minutes. We've got market composite PMI, services PMI. We've got IBD, tip economic optimism sometime today. But the big one today is going to be the ISM non-manufacturing PMI at 10 o'clock. So and we got JOLTS jobs to go along with that. So that'll probably be the market mover. At 11:30, we've got the 4-week bill auction, and that's about it. We've got the API weekly crude oil at 4:30, but that's not going to be in the RTH session, so we don't have to worry about that. Each morning, I like to start my day with a very simple exercise. Some people think it's waste of time. It is not a waste of time. And what I do is I start with a simple candlestick chart. I start on the monthly. I use a 9 EMA, 20 SMA. Those are the moving averages that I use. And what I'm looking for is where we are in terms of the trend in each of the time frames. I don't want to take my eye off the big picture and get blinded by smaller rotations. So I want to know where the trend is on these time frames. And what I'm looking for is slope and separation, price paralleling the 9. Is it challenging the 9 or breaking below it or above it, depending on the trend, or is it violating the trend by a move above or below the 20? And you can see that this upward monthly trend was challenged. We had 14 months of one-time framing up, and then we violate that one-time framing, come down and test this 9. But for the last 5 months, we've been unable to get below and hold below the 9 EMA on the monthly. So its trend is very much intact on the monthly. On the weekly, we thought we were going to see a possible trend change. They rolled over, they broke below the 9 and 20, then they took it back, and then they fell back down. And this is where I thought we could start seeing a move back down towards the 2400. And what happens? They take it right back. And now we're in a situation where we're getting an MA kiss and MA cross. And this is usually when they start to break away. And so far, this move is above a key resistance level at 41.75. And I'm looking for continuation up into the 57 and most likely towards that 2800. But as the monthly is telling us, even if we do dip back into the 2700s, even into the 2500s, the overall trend on the bigger picture is not even close to being changed. So pullbacks are good for buying right now. On the daily, you can see that we are in this symmetrical triangle, and we're broken out of the symmetrical triangle, and we're starting to get slope to the upside, not so much separation, but we've got the continuation pattern of a trend up on the daily. Going to the 4-hour, you can see the same thing. We've got good slope, good separation. We're losing a little bit of slope and likely come back and test this 42 area and bounce or break through. I don't know. Nobody can tell you. But as it stands right now, all the time frames in the larger time frame are all to the upside. The 4-hour is. Going to the 30-minute. We're seeing a little bit of weakness coming in, and we're below the 9 and the 20. So we're looking for the overnight inventory. So we look at the overnight inventory, and the overnight inventory is pretty balanced. I'd say it's about 60% net long in time and value. We just got a VPOC shift from up here. It looked like they're going to accept this price higher up at the 49. Then they come down. We get a shift of the VPOC down to 45. So I'd be looking for a continuation move to test the value area low from yesterday, possibly even test the gap. We've got a gap below from yesterday now. So we've got a gap above that we've tested into, and we've got a gap below. So right now we've got a double distribution with a LVN at 47. So that's going to be a trade level for us and a key area to keep an eye on. So let's take a look at the bigger picture. Excuse me. And I'm just going to narrate this because I always want to give everybody context of how the levels are determined and what I'm looking at. So we get this beautiful long upward trend towards what is an unequalized all-time high. What do I mean by that? The all-time high is actually put in the Globex. This is a regular trading session, just the RTH session, but the actual all-time high is at 28.83 and a quarter. Put it in the Globex. Our all-time high is 28.80 and a quarter in the RTH session. Statistically speaking, these never hold. They will get taken out. The 28.83 and a quarter will get tested in the RTH session. Then we tried to hold value after putting in that unequalized high, and we break down, we gap down, and we make a trip all the way down to a prior microcomposite VPOC, price acceptance. So we fall out of this balance, we go into price discovery, we go back to a prior balance area, we find buyers, we pick them up, and then we come up and we try to go back into the 2800s. Where do the sellers come in? From the prior price acceptance level. They reject it again, and we come back down and we test through, and we've been chopping in this very large balance area, this composite that goes from February the 2nd through till today. And our value area high is at the 40.75 with a key LVN, CLVN, composite LVN, microcomposite LVN right there as well. And we get into this this microcomposite. The VPOC shifts up from the 69 to the 18. The smaller time frame shifts from the 06 to the 18. So we accept this 18 price, and then we go and we gap up and we break out. And right now we're above value, meaning we're back in price discovery. Even though we had a balanced day yesterday, we broke out and now we're in balance above with a gap below us and the gap above us still open, this gap right here. We tested into it and tested to the midpoint, that 49 area, and the 61.8% retracement of the all-time high down to that fractal low at the 25.35 area. And now we've tested it and we've rejected the 51 and a quarter CHVN from overnight. Our overnight high is 51.75, and we're coming back down to the lower side of this balance and towards yesterday's low and the gap below us and the value area high. So what's the most important level today? 41.75. We need to hold that or dip below, test to the mid of the gap, and then break back up. We have to hold the LVN if both those zippers measured moves stay in play for the 54. And of course, the target today is going to be this 57 with 54, 53.50 and 54.50 as our immediate targets above. If we break below the 41.75, look for them to come down and test the high of this day right here at 37, and anything below 37 will put us inside of this value, where it will be back inside the bigger value, but it'll also put us inside of the value of the smaller time frame from May the 9th through to the gap up on from yesterday. So I'd be looking for a bigger move back towards the 28. And if 25 doesn't hold, they move back into balance and right back to chopping in this balance zone right now. I think there's less likelihood that this is going to happen this time, but you never know. You can't rule it out. That's why we have multiple hypotheses. So taking a look at the overnight session, our overnight high 51.75, our overnight low 42. We're just trading above it right now. I'm sorry, just above it right now, but we're below the 47, and that 47 is right there at yesterday's VPOC at 46.75, just below the value area high from yesterday. This is a very valid area. Value area from yesterday. I can't talk today. So we're likely to take a trip through value and come down to the 43. And I'm looking for this overnight low to be tested, and then possible dip or bounce from here. The VPOC just shifted down. It's not likely going to shift now, so it's at 45.50. Now I had to put my gap zones a different color. Usually they're gray like my trade areas, but I wanted to put the trade area within the gap. So we've got this gap below us, and we've got the gap above us, and currently we're seeing a little bit of weakness coming in. So I'm looking for a continuation down, and then somewhere down here a bounce. So the average true range, the full session 20 period ATR is now at 26.50. So that's tightening up, and that gives us a upside ATR target up here at 68.50 based on the low overnight of 42, and based on the overnight high of 51.75, a daily ATR down target at 25 and a quarter. Why is that important? Well, we have to understand and we have to watch as we open. If we break below the 42, then that average true range is going to come down here. And if we break above the 51.75, the average true range is going to come up based on what the full session range high and low. But it gives us a good gauge of what the range capabilities are without expansion beyond the 20 period. But I'm expecting to remain pretty tight. The catalyst today and the movement will likely come off of the ISM non-manufacturing PMI. So watch your 10 o'clock flip zone in terms of news. So what are my hypotheses? So let me just, and again, I'm trying to use these drawing tools, but I kind of hate the drawing tools. I'm not very good at them. Okay, so my main hypothesis is a open auction in range in value. I'm looking for a open auction in range, a push down, take out the overnight low, and somewhere between the 41 and the 37, I'm looking for them to fight this. Maybe a probe down to close the gap in the 33.75, but I find that less likely, and I'm looking for a move up into the 49, get back into that gap zone, fight the high, and then push up into that 53, 54 area, chop there, and then push up into the 60 before finding sellers and coming down and closing somewhere in around the 48 to 51.75. That is hypo 1. Hypo 2 is a open auction in range, a push up, close the gap from yesterday, chop here, maybe even a probe and a false breakout, but sellers stepping in, pushing us down, testing the low, then pushing down into this 33.75, and then finding buyers and coming up and closing somewhere inside of yesterday's value area, in between the 43 and the 47 area. That is hypo 2. Hypo 3 is a breakdown day, a open auction in range, failure to break out of the prior day range, find sellers quickly, push us right down, get an impulse wave here, come up, test the low from yesterday, fail, and then push down towards this 25 and possibly even a push down into the 18 and balancing around here and coming up and closing somewhere between the 25 and the 30 in around here. That is hypo 3. Hypo 4 is a continuation day, open auction in range, a push down, failure to take out the range low from yesterday, find buyers, push us right up into this 54, 55 area, come down, test the range high from yesterday, and then get continuation wave up into this 60 to 63 base here and get continuation up towards the 2770 area and closing up here as a continuation day. So those are my four main hypotheses. There is a fifth hypothesis, which could just be another balancing day where we have an outside, okay, a outside scenario. So we open auction, okay, we push up, we break the range high from yesterday, fail in the gap zone, come down through the day, come down and test this 33 and come up and close inside. So basically a engulfing day, okay, against this tight range from yesterday. That is hypo 5. So those are my four main and my fifth hypothesis. Going to look at gold. Gold continues to come down here and base near. This is wrong. This chart is wrong. This I didn't do a download here. I had problems with my my gold charts on this computer yesterday. This should be 95 area. This is still not correct. I've rolled over to the Q contract, and this composite VPOC shifted to 1295. It's on my other computer. 1295 area. So I'm gonna have to skip gold again. But basically, gold is currently right now trading at 1297.50 and testing the 1300. I'm looking for 1300 to fail here and get a rotation back down, but it's going to be into the 80, I think it's 84 or 82 area. But I'm gonna have to wait for this to download and see why I'm having issues with this, because this is not a there. See, it's adjusting. So it's 95, 95, 90, and we're chopping right inside of it after failing to hold the 1100. So I'm looking for one more 1300. I'm looking for one more test of the 1300 and failure, and then I'm looking for a move down into this 84, 83 area, and possibly if this doesn't bounce, we're not getting away from this price acceptance. This composite VPOC goes all the way back to October 24th, 2018. But if we do get back into the 1300, watch the breakout above 1305, okay, for another test of this this weak high here at the 11 to 12 area. Then I shift my focus to the move back towards the balance that we fell out of in the 30, 1329, 1330 area. If we don't bounce off of here on the test of the lower side of this balance here, then I'd be looking for a bigger move down to 1273, and it wouldn't surprise me if we came down here into the 1244, especially if we rally and get back up into the 2800s in the ES. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and I will catch you on the flip side.